Well, hi, everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap Letter for July 27th, 2024. And remember, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, well, the market was up, and then on Wednesday, the market was drastically down, and the charts continue to point down. However, Friday, things began looking up as the inflation numbers did not disappoint market participants. And guess what? This coming week, we have a Fed meeting, we have Microsoft reporting, and we have Meta reporting. And Microsoft and Meta are going to tell us if they're making money with AI or not. As Google came down this past week and said, no, we're not making more on the cloud than we spent on AI. So it's going to be a very interesting week. And our weekly stock analysis video, well, super microcomputers revenue growth trajectory almost perfectly mirrors NVIDIA's, which is a strong indication that combining products of these two companies in building data centers to power AI is the industry's best practice. And boy, there it is, data centers. That happens to be the buzzword of the last couple of months, hasn't it been, folks? And our ETF video, well, trading with the use of hedges is showing to add value to both our sector stars portfolio and also our top stock portfolio, made up of the best stocks of the best in the QQQs, especially after the big drop this week in the tech sector. We made a lot on those hedges, so we did very, very well. All right, let's look at the S&P 500, and you can see we just hit the top up there. And remember when we said once we break through the top, there's momentum in the market. We get a little drop back, and then it has to test that high once again, and it did. Stopped right on that top line right there, and then the market came down pretty drastically, and then in the beginning of the week went back up again, held this moving average in here, and this is the S&P we're talking about. And then on Wednesday, bam, and then Thursday was not much better, but Thursday it seemed to hold its own right up until about the last hour, and then went down again, closed right on this bottom band. And then Friday got a nice little relief rally, which sent the Dow up 654 points. Nice move. But when we come down here to our intermediate term index, it did not turn this at all. But let's look a little closer. Now again, this is the Dow, and we can see the Dow came down, and this is a very short-term indicator up here. The Dow came down, hit its 20-day moving average, fell below it. The next day it closed. We had a nice rally going into the close, but then this closed right at the 20-day, and then Friday we had almost a 700-point rise in here. And when we come down here, boy, oh boy, this is nice. It looks like it turned this indicator, or starting to turn it around. We have to wait for this black line to cross up over the red line. So this coming week is very, very important for this market. Is it going to hold this whole area in here? So you see this line across here? Yeah, it's a very, very important line. And then when we come to the S&P 500, we're seeing the exact same type of thing. And down here, we want to see this line point, or this point right here above this point. So this is not helping us, but at least we were oversold, and the market then started coming back very nicely. This blue line is the 50-day moving average on the S&P 500. So this market held the 20-day moving average, which is this green line, held the 20-day moving average for a little bit, then all of a sudden dropped right down to that 50-day moving average in one day. That was this past Wednesday, and now it's making a move to get back up to this 20-day moving average. And let's look at the QQQs. QQQs actually, even though this was quite a drop in here, folks, and this is where our hedges came in, and the hedges did very, very well during this period in here. And then the market is going up. This is the kind of thing that we want to see that says, okay, we have a short-term buy signal in here. Now, again, as I mentioned, we have a Fed meeting Tuesday and Wednesday, and then Tuesday and Wednesday we have Microsoft and we have Meta reporting, and that's what this market is waiting for, because Google didn't do too well because of its spending. It made money, made all kinds of money, and it beat expectations, but still the stock fell a little bit because the AI is, or their cloud income is not beating what they spent on AI so far. It's close, but not close enough, folks. So anyway, we're going to see what happens, and let's draw this line across here, and we can see why we're stopping at this level in here because of this line. It means something when it was a line of resistance in here, and then the market went down, went back up, and came back down to test this support in here, so it became a line of support all the way up, all the way down, and we're testing it as a line of support as we speak. So Monday and Tuesday and Wednesday are going to be wild days in the market, folks. You want to be here, and you can go to our website and get our 7-day free subscription so you can follow us for the next week, because it's going to be a very, very interesting week. And the key is, can this market start moving up and turn this indicator around? This is our intermediate term indicator, and you can see that once it gets down in this area and then turns up, we get a nice rally out of that. So it's this, that's why we call it an intermediate term indicator, because it can last a couple of months once we get that signal. So if we can get this indicator to turn in here, and when you look at this is the histogram in here, and when you see the histogram at the bottom and start to level out, then usually it comes back up, and because the whole market turns around. So that's what we're hoping for this week. Meta and Microsoft, keep your fingers crossed, folks, and we get kind words from the Fed, which we should, because inflation numbers came out on Friday, which was yesterday. I'm reporting this on Saturday morning. So on Friday, inflation numbers came out. They did not harm the market one bit, and so it should give the Fed something to talk about, and we want to hear dovish words from the Federal Reserve. And portfolio protection for those of you who buy puts about 12 to 15% below the market, and this way you're protected all the time and you don't have to worry about the day-to-day fluctuations. And this is about $140,000 portfolio, and we have 3 puts, and you can see that as the market goes up, these puts went up. So we bought all of these puts very, very cheap, and you can see we need 3 puts for, and these are the SPY puts, so we need 3 puts to protect a $140,000 portfolio, and we'd like to stagger them out, go out to October, and in case the market starts to go down and one of these expire, we have other puts just sitting there, because once the market starts going down, or if it keeps going down, these puts get very, very expensive, and since we have them, we're making money off of them. But to buy more puts to keep your portfolio protected then starts to cost money. That's why we stagger these. Very, very nice strategy. Been using it for over 20, 30 years, well, 30 years now. So it's good for that drastic decline in the market when we're not ready for it. It could be anything, and therefore we are protected and we don't have to worry about it. So folks, we had a crazy week this week where the beginning of the week was pretty good, and then Wednesday the market just shot down, and Thursday it tried to hold its own, Friday reversed to the upside, but will it hold? So remember, if you want to walk on this beautiful beach at sunrise like Jimmy Buffett used to do, then folks, you've got to learn how to invest even better than Warren Buffett does now. And yes, our portfolios over the past 22 years have outperformed the S&P 500 almost 3-to-1 on a compounded basis, and has doubled the returns of Warren Buffett himself. And we're not using the tiny stocks out there. We're using the large cap stocks, but we're using the best of the large cap stocks. So folks, forget about the market for a few days. Go out, walk on the beach, be with your loved ones, have a Sunday dinner, but most of all, be safe, and we'll see you back here in a couple of days.